So most people write off JLT before they've done the maths. That is exactly why this opportunity exists. In this video, I will walk through the Hilton Residences JLT, a branded residence development in Dubai that most serious investors haven't looked at yet. And I want to show you exactly why that's worth changing. So the conventional view on JLT, Jumeirah Lakes Towers, is that it's a secondary location. A lot of people say just because it's got older builders, a bit of tired infrastructure, and somewhere you would rent if you can't really afford to buy an arena. But the data on what's actually happening in the district right now, the infrastructure investment that's going on, the rental demand that's sitting underneath it, kind of tells a completely different story. When you layer in a Hilton branded residence on top of that foundation, the investment thesis gets very interesting very quickly. We're going to cover the location, what's going on the ground, the developer, and the design teams behind this project, the building itself, including one product that doesn't actually exist anywhere in this community. And then we're going to go through and run through the actual numbers: purchase price, mortgage service charge, rental return. So you leave this video knowing exactly what this asset does to a portfolio. Primarily, I work across the Abu Dhabi and Dubai markets, focused on investment strategy for international investors and high net worth buyers. And this channel is where we break down what's actually happening in the UAE real estate market using data, not developer marketing. If you want independent market analysis without the sales spin, subscribe. I publish content every week covering both markets. Okay, let me orientate you first. Jumeirah Lakes Towers is a free zone district sitting directly adjacent to Dubai Marina with direct access to Dubai Metro. But more importantly, it sits at the heart of the DMCC, the Dubai Multi-Commodity Centre, and this is one of the most significant commercial free zones in the world. Got gold, commodities trading, financial services, and over 1,000 international companies. Now, according to the DMCC, this free zone contributes approximately 7% of Dubai's entire GDP. And when you buy in JLT, your tenant pool isn't normally students or entry-level workers. It's professionals. It's people maybe working in DFC and DMCC towers in the financial district who want to work to the metro and be at their desk in 15 minutes. And that really underpins your rental demand in a way that a speculative new district cannot really replicate. Now, the criticism has always been of JLT that the infrastructure and it's a bit old, and historically some of that was fair. But what's actually happening now on the ground is different. So you have Bay 360, a 22,000 square foot waterfront redevelopment of Lake D and JLT, and this will hand over in the same year as this development. It'll be food and beverage, retail, public waterfront activation. The district is actively being repositioned, not maintained now, and the buildings that sit in it when this reposition completes are the ones that will kind of capture the upside. But the location only matters if the building can justify the price. And this building is not a standard JLT apartment. And let me show you exactly what Emirates Developments and Killa Design are actually delivering. So the building was originally constructed in 2008 as a commercial office tower. Emirates Development, which has been operating as a construction engineering company in Abu Dhabi for the last 20 years, acquired it and made a deliberate decision to strip it back and rebuild it as a high-end branded residence. This is not really a renovation, this is a full repositioning play. And in 2025, Everett's Demerits was formally added to essentially the holding group with a single mandate to deliver high-end branded residences, working with the likes of the Hilton, Jumeirah, and so far Ellie Saab. And this, their products that are in Abu Dhabi, and of course this one is in JLT, and the facade is being redesigned by Killa Design, which is the architectural firm behind the Museum of the Future here in Dubai and the Marsa Al Arab in Jumeirah, and also the ultra luxury Jumeirah Resort in Saudi Arabia. And if you've seen the Museum of Future, you know what Killa Design does. They don't really work on ordinary buildings. The interiors are by Atelier, which is a hospitality design house which projects including the Curio collection. You've got the luxury collection in Riyadh and the Sheraton down in JBR, for example. And these are hotel designs, and this matters because you're getting an apartment that isn't built specifically as residential interiors. This is the finished level of a five-star hotel room, but you own it. And the brand here is Hilton Residences. It's not a hotel, it's a serviced apartment product. Your residential building operating under the Hilton brand. So there's no short-term lets. The minimal contract will be 6 months. And that's a deliberate decision to protect the exclusivity of the asset and the quality of the resident community. What this means for you as an investor is a stable long-term tenant, not Airbnb churn, not some transient demand. And for the end users, it means that your neighbors are owners. They're long-term residents, not tourists. So the building has 396 apartments across 38 floors, and it's again in clear tiers. So on the 19th floor, you have 8 two-bedroom apartments with balconies, 4 with study and bedrooms, 4 without. On the 28th floor, you have 4 corner 3-bedroom apartments with wrapper and balconies. And on floors 36 to 38, we'll get to those because it's something a little special. Between those, you have your studios, you have your one bedrooms with a study, and you have your 2-bedroom configurations. And each is priced to reflect a different buyer, a different strategy, and they're semi-furnished throughout as well. So everything apart from your loose furniture is included. Now, for most investors, the 2-bedroom corner unit is where the conversation can get serious. But there's one product type in this building that sits in a category entirely by itself. Floors 36 to 38 contain 4 sky villas. And I want to spend a moment here because this is not just a large apartment with a view. This is a 3-floor vertical villa built into a high-rise tower that does not exist anywhere else in the JLT. And each villa is around 392 square meters, so approximately 4,200 square foot. And on floor one, you'll have your living area, you'll have your kitchen, etc. You'll have your major room. Floor two is spread across the 4 bedrooms, and then floor 3 is where you will have your outside terrace, your private pool, your private gym, etc., with views across the lakes or out to Dubai Marina. Nice things as well, you'll have a private lift connecting all 3 floors, and also it comes with 4 parking spaces as well. So for the end user buying at this level, the question is yield. It's more, where else in Dubai do I get a freehold vertical villa with a private pool with views to the marina and the Hilton Residences address at a price point that sits below comparable products on the Palm or in the new ultra prime launches that are coming to the market. Sky Villa is here for someone who wants the privacy and scale of a villa, but without the villa location, and that's a very specific and underserved buyer in this market. Pricing is available on application. If this is your product, reach out directly and we can have a conversation properly about this. Now let's get to the numbers because the location is compelling, the building is exceptional, but none of that really matters unless the investment case holds up. And I want to show you exactly what this asset does to a portfolio over 3 years. My recommendation, and I'll be specific, is a 2-bedroom corner unit, approximately 1,000 square foot. The price is from 2.9 million dirhams. And here's what it actually costs to get in. The payment plan is 3565. So you're looking at 5% on booking, 30% during construction, and then 65% in Q4 2027. On top of the purchase price, you're going to have your 4% DLD fees and around 3% for mortgage arrangements, insurance, admin, etc. Total capital deployed in this asset is 1.22 million. Now, on the rental case, there are only really 2 other branded residence products in JLT today with real transaction data behind them. One of them is the Residences. It's at the Taj. It's the closest comparable in the district, and it's currently achieving between 200,000 and 250,000 per year on 2-bedroom units, based on the latest property monitor data from the last 3 months. The units on average range from 1,400 to 1,600 square feet. The Hilton 2-bedroom corner is approximately 1,000 square feet, so it's smaller and it's more efficient. A conservative rental assumption would be around about 180,000 per annum, plus it puts it around about the 180 AD per square foot mark, which is in line with what the Taj is trading at. Now, on the other side, there's Slow Uptown, which is the ultra prime tower at the top of JLT, which is around about 310 to 350,000 comparable to bedroom. but that's not really one we are chasing. But it does tell you what the kind of the top of the market can achieve in here in this community and how much runway the Hilton Residences has to establish itself. Now, the three-year return stack really is what we're looking at here. On a mortgage basis, 65% LTV on 2.9 million at 3.75% interest. Your repayments will be 9,700 per month. Service charge at 24 dirhams per square foot is 24,000 a year. So in year one, after your service charge, your monthly payments, your net cash position is about 39,000 dirhams. But that's not your full return, that's just the income layer to this. On top of that, there's a conservative 4% annual appreciation. So in year one, it can grow up to 116,000. And then you have your tenant is kind of quietly paying down your mortgage, which is going to be approximately 26,000 principal repaid in the first year. Three return layers running simultaneously. Cash flow, capital appreciation, and principal pay down. Run that across a 3-year projection on 1.2 million deployed in capital, the return on equity is material. And these are conservative assumptions. These are not optimistic projections. Only one number that's worth noting separately is the service charge. So at 24 AD per square foot, usually buildings of a branded residence in Dubai Marina are around about 35 to 40 AD per square foot. And over a 10-year hold, that the difference in service charge alone compounds into a meaningful number. It's not a headline figure, but it's part of how you can build a resilient investment. What have we covered here? JLT is a live high income employment district accounting for around 7% of Dubai's GDP through the DMCC, with active waterfront infrastructure coming in 2027. Emirates Development, along with Killa Design and Atelier, were developing a building that sits completely differently from anything else in this community. And the Sky Villa is a product type with absolutely no GLT comparative. For the right end user buyer, the value gap to the PAM or ultra prime launches is significant. And the two-bedroom corner unit on currently mortgage rates generates a simultaneous return layer in three different ways: cash flow, capital appreciation, and principal paydown on approximately 1.2 million dirham of deployed capital. The reason most investors haven't looked at this yet is because they are already decided what GLT is, and the data suggests that the decision was made with old information. So if this kind of analysis is useful to you, subscribe. This is what every video on the channel looks like. And if you want to talk through this project, specifically the numbers, the unit types, or whatever fits your strategy, the link to book a consultation is in the description.